Hello investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And the reason I'm starting off with this one is because last week we didn't have enough time to cover this index because the promoters from the Money Show asked that I plug the Traders Expo that's coming up next month. That's the weekend of July 23rd, so stay tuned to that. This, again, is a candle chart, and if you're following along with the Market Guys, you'll know this is one of the best tools for forecasting. And you can see here that the market pulled nicely right back to the 20-period moving average, and today we formed a small-bodied candle that's showing a long shadow under that candle. Now the candle is green, the volume is higher, and the long shadow suggests that the buyers are starting to move in, or they started to move in already towards the end of the day. Now what does that mean for next week? Well, if you notice, the market gapped down today. This was a combination of the news that the U.S. is going to impose a 25% tariff on all goods coming in from China. So the knee-jerk reaction was the futures took a dive right before the market opened. We were down over 200 points, almost 250 points. And then as things started to settle, the buyers found a comfortable level to start getting back in, and that 20-period moving average is our indicator for that. So the forecast for next week, I believe, is that we're going to see a bounce off of that moving average just like that, and we could go up as high as this resistance point right here. I'm going to draw that horizontal line showing resistance. The end of this line is my target. If you've been following along with the Market Guys, the diagonal line represents my forecast in the trend, but the end of the line is where I think the market will ultimately wind up, at least during the course of the week. So keep an eye on the diamonds. Now, if you're following along, again, each and every week, you'll know that the percentage of accuracy here at the Market Guys is quite high. This is what happened last week on the S&P. I said that we would move up. We did just that. And then I said we would most likely test this resistance and pull back from resistance. So I drew my line in this downward direction, signaling the pullback in the forecast, with the end of the line being my target. Look at that. We came right to the penny, maybe a little bit more than my target. So what does that mean for next week? Well, again, we're seeing that long shadow underneath the candle. Take a look. Back here, we see a long shadow. What happened? The market rallied. Right here, we saw a long shadow under the candle. What happened? It rallied. Back here, look at that shadow. That's a long shadow. That was a perfect buy signal back there, and the market rallied with conviction right there. So there's a good chance, and I'm just going to really just extend my forecast out like this. There's a good chance that we will rally next week in the S&P and possibly hit resistance up here right around the 280 level. Now, the volatility index, known as the VIX, is a contrarian indicator that we look at. And this was very interesting this week because as the markets were opening up this morning in a downward direction, the VIX was also down. I thought this was very odd because the VIX did not follow suit whatsoever. In fact, if you look, if the S&P dropped like it did, you would expect the VIX to rally, but it didn't. But I think ultimately it will. Again, next week, maybe even in the week after that. So I'm going to move this over, and I'm going to make my forecast right here. I think the VIX could actually go down just a little bit early on next week, and then I think we're going to see a pop in that. I'm going to make this a 2-week forecast to extend this out, and we'll take a look at how that works out. Now in the Russell 2000, that's ticker symbol RUT, we have a more broad-based index representing 2,000 shares. I said that we would most likely pull back. We didn't, but, and this is the big but, if you look at today's candle, you'll notice that this is very, very close to a doji, which is a sign of indecision. It's a spinning top slash doji. These are cousins of one another. It's a sign that the buyers are not convinced it's going to go higher, so they pull back a little bit. But the sellers aren't convinced either, so they didn't really fight today. But that is, again, a sign that we could form that pivot point, come back down. So I'm going to move this over, and then I'm going to draw it just like that, where I think that the Russell 2000 could pull back towards this moving average, with the end of that line being my target for next week. Finally, the Qs. That's ticker symbol QQQ. Like the Russell 2000, it didn't pull back, but that doesn't mean it's not going to do that next week. I'm going to move this line over because look at this perfect doji right there. See that? I'll zoom in for you before I draw that line. That's a perfect doji, and that's a sign of indecision, usually found at pivot points, so I think the Qs will pull back. And if you notice, look, we had a doji here, we had a doji back here, right there. See that? Right before the pivot point, we had spinning tops, again, very similar to a doji. And if you go all the way back, you'll see dojis right here at this pivot point, and even beyond that, you can see that the spinning tops and dojis are, again, right there at those pivot points. So there's a good chance that the Qs will pull back next week, so I wouldn't go crazy buying into any major long positions. Just be really cautious and make sure you're setting your stops. Now, this coming Monday, and that's going to be June 18th at 8 p.m., we're having our open house Q&A session. And this is something I do each and every month, where I take your stock symbols, I answer questions. It's really a lot of fun. And even if you're just a fly on the wall, you're going to get some really great ideas. To get involved with this and save your seat, just click on the Register Now button right there. It'll bring you to the registration page where you just fill in your information, click Register, and your seat is saved. Now, this is a go-to webinar platform, so the system will give you a reminder email automatically. That way, in case you forget, you'll get that email long before the session begins, and you won't miss a beat. So have a great weekend, and we'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.